Thanks so much for joining our discussion today with Chugh CPAs LLP on the second round of Paycheck Protection Program, or PPP loans. My name is Sasha Preston Sooney, and I'm based in our Los Angeles office. I'll be moderating our discussion today. If at any time during the presentation today you have any questions, please feel free to type them into the Q&A chat box. We'll answer as many of your questions as we can at the end of our presentation today. We've got a great panel of experts joining the discussion today. I'd like to welcome Kapil Honda, partner and CPA in our Atlanta office, Judith Terry, CPA in our Los Angeles office, and Jyoti Javeri, accounting team lead in our Santa Clara office. All right, so let's dive right in. Kapil, could you give us an overview of the second round of PPP loans?
Sure, thank you, Sasha. Hello, everyone. Thank you for attending today's webinar. As many of us know that the government has come up with a new COVID-19 relief bill, and the Congress has signed that into law on December 27th, amounting to $900 billion, out of which Congress has authorized $284 billion towards the PPP program. Again, one thing to be noted here is out of those $284 billion, Congress has specially allocated $35 billion towards first-time PPP borrowers and $15 billion towards the small community financial institutions. See, that's the learning that the Congress had, or the government has, in the very first round of PPP, under which they realized, sometimes because of the small size of the banks, because of the system issues, not proper documentations, they were left behind for some of the loans for their borrowers. So that's why they have opened the application for the community financial institutions on Monday, which was the day before yesterday, on January 11th, so that they get the first move advantage. And once they do that, they are going to open the application for the rest of the banks very shortly. As we know, we are still in the middle of the pandemic. Government has realized, the first program under which they allocated $525 billion towards the PPP program was a great success. Many of the businesses which may not have made it, which may not have survived the slowdown, were able to retain their employees, retain their high talent, just because of the funding. So that's why they came up with the second round of PPP, so that to make sure the remaining businesses can still survive, because we are still in the middle of pandemic. We are not done yet. The problem is not over, but we are fortunate that the government is trying to do everything that they have in their leeway to make sure that we get it through.
Thank you, Kapil. That is very exciting. How exactly are PPP loans calculated this time around?
Sure, Sasha. Again, that the Congress is saying, this time, again, 2.5 times of your average monthly payroll is the amount that you will qualify for the loan. Let's take an example that somebody had in 2019 average monthly payroll of $10,000. So that borrower or that business can apply for up to $25,000 payroll loan for that from the government. Of course, this time the government has also given some exception to the restaurant and hospitality industry, in which case they are saying instead of 2.5 times average monthly payroll, they can actually obtain 3.5 times average monthly payroll, because Congress believes, as many of us know, that industry of the society has suffered the most, the food and hospitality industry. So they are giving a little more attention towards that industry in this round of PPP. And lastly, the amount of loan. So in this case, what have they come up with is the amount of loan that they can get under this per entity, per location is $2 million. So the point to be noted here is sometimes we have controlling groups. So the same promoter may have a stake in one entity, and maybe they have the stake in other entity as well. So they want to make sure that they can get $2 million per business, but in totality in their controlling group, they should not be getting more than $4 million. So that's the point to be noted.
Thanks for that overview, Kapil. So which first-time borrowers are eligible for PPP2 loans?
Sure, Sasha. So any time any business has 500 or fewer employees, they qualify. Any non-profit organizations, self-employed people, sole proprietors, they all qualify. The only catch is to make sure that employees per location are 500 or less. So one point I would like to make here is sometimes what happens is, in the hospitality industry, the same owners have stakes in very many different hospitality ventures. But in this case, all they have to make sure is they are less than 500 employees per location, even though they might have controlling stake in other entities. That's okay. That's why the Congress has given them an exception. If it's in hospitality industry, all they want to make sure is there should be less than 500 employees per location. And then when they say per location, they really mean is per federal ID number. So I can share with the listeners, sometimes we have clients who have one entity, one federal ID number under which they might have two locations. So let's suppose in that case, one location has 400 employees, second location has 200 employees. So in total, it will become 600 employees. That will not qualify because it was under the same federal ID number. But if in this case, they would have created two separate legal entities, they would not have to deal with this issue and they would have qualified under these circumstances.
Thanks for that useful anecdote there, couple. And some exciting news that some people may not be aware of is that previous borrowers are also eligible for PPP2 loans. So what are some of the requirements for previous borrowers to take out a second loan, couple?
Absolutely, Sasha. Again, for the second time borrowers, one of the conditions is that the number of employees should be 300 or less. The second is they should have used their entire amount of the PPP1 program, or they will be using the entire amount before they obtain the loan for the PPP2. And one of the most important criteria for this PPP2 program is government really wants to see if their business actually suffered. So the criteria is their revenue should be decreasing by 25% or more. So a lot of times in the PPP program one, what happened is many businesses, they were able to survive because of this new model. Some of the businesses actually increase their revenue. So in this round of funding, government doesn't want to give that funding to those people who are able to sustain through their operations. They only want to help those businesses who are actually suffering and their revenue is actually down more than 25%. So going further, what does 25% decrease in revenue means? That means in any quarter in 2019, when you compare any quarter with 2020, and if the revenue is less than 25%, then you qualify. To give an example, let's take in Q2 of 2019, your revenue was $100,000, and the corresponding quarter in 2020, Q2, let's suppose your revenue is $70,000. So in this case, your revenue decreased by 30%. Then you do qualify. So I think that's to keep in mind. So the revenue needs to go down. That's only you qualify. And of course, some of the employers actually returned their PPP program. So, sometimes what happened in the PPP1 program, businesses did borrow the money from the government, but after some time, few months later, they realized they don't need the money. They returned the money back to the banks. So they do qualify under the second time borrowing.
Great, thank you for those illustrative examples there, Kapil. So moving on to Judith, what are some of the loan terms of PPP2 loans, Judith?
Thank you, Sasha. Hi, everyone. I'm Judith Terry from our LA office. For the PPP2 loans, they are generally subject to the same terms as first draw PPP loans. No collaterals required, no personal guarantees are needed. PPP loans are up to 100% forgivable, but in case a borrower won't qualify for forgiveness or only qualifies for partial forgiveness, the borrower needs to pay 1% interest rate and the loan maturity is 5 years. Back to you, Sasha.
Thank you, Judith. How should businesses spend their overall loan proceeds in order to qualify for forgiveness?
As provided in the PPP2 Act, PPP2 loan forgiveness generally will be done under similar terms and conditions as first draw PPP loans. However, expect that SBA will issue further guidance on the PPP2 loan forgiveness. At the moment, in order for the loan to be forgiven, a borrower must use at least 60% of the PPP loan on payroll costs and the remaining 40% on eligible non-payroll expenses during the covered forgiveness period. One of the key details in the PPP2 Act is, besides the expansion of eligible expenses, which will be discussed later, is that certain group insurance payments, such as group life, disability, vision, or dental insurance, are considered payroll costs. Another change contained in the PPP2 Act is that previously you either select 8 weeks or 24 weeks for the covered forgiveness period, and in no event may the covered period extend beyond December 31st, 2020. But with the PPP2 Act, it now allows a borrower to select the ending date, which can be between 8 and 24 weeks after funding. So technically you can spend and spread the money on wages as you have 24 weeks to do so. So the covered period extension and change were made with retroactive effect as if it were originally enacted in the CARES Act. That's all for the loan forgiveness. Back to you, Sasha.
Great, thank you, Judith. So, Jyoti, in addition to payroll, what are some other expenses that businesses can use their PPP loan funds on in order to qualify for forgiveness?
Sure, Sasha. Hello, everyone. Yes, there has been a bit of relief as there is an expansion of the covered expenses. The Act now expands the scope of expenses for which the PPP loan can be used and that are eligible for forgiveness. Previously, the PPP proceeds were to be used for payroll, rent, mortgage, utilities in order to qualify for the 100% forgiveness. But pursuant to the Act, the PPP proceeds may also be allocated to the following new expenses, like the operation expenditures, software and cloud computing service payments used to facilitate the business operations, payroll processing, billing, accounting, HR functions, etc. Supplier costs that are made to suppliers of goods that are essential to the operations. The other one is the property damage, costs related to the public disturbances that occurred in 2020, like looting, vandalism, to the extent which is not covered by any other insurance or other compensation. The other category which is included is the worker protection cost or the personal protective equipments. These are the costs related to be compliant with the regulations issued by CDC, OSHA, or any state or local government authority. These could be operating or capital in nature, but which are needed to be facilitate the adoption of the business activities of the entity to comply with the above requirements. They could include the drive-through window facility, the physical barriers such as sneeze guard, etc. It is important to remember, as Judith just mentioned, that not more than 40% of the total amount forgiven with respect to the PPP loan can be attributable to eligible expenses that are not payroll costs. Back to you, Sasha.
Super helpful overview there, Jyoti. So this time around, the forgiveness process has been simplified. Could you tell us a little bit more about how that process works?
Yes, that's correct, Sasha. The Act has now added a new direction for simplified, streamlined application for the PPP forgiveness for loans up to $150,000. So under this new reform, any PPP loan that is not more than $150,000 will be forgiven by a simplified process. Basically, the eligible recipient will need to sign and submit to the lender a certification which will include the description of the number of employees that our eligible recipient was able to retain because of the PPP, the estimated amount of the covered loan spent by the eligible recipient on payroll costs, and the total loan value. The eligible recipient of these loans is not required to submit any documentation in addition to the certification. However, we recommend that you retain any of your documentation or supportings with yourself in case you need to justify the same in the future. Also, the EIDL advances, as you may all know, was initially granted based on number of employees up to a max of $10,000. The Act now repeals the requirement that PPP borrowers deduct the amount of any EIDL advance from their forgiveness amount.
Can you read it?
So the good news is that the total PPP forgiveness would not be reduced by any EIDL advance. The EIDL emergency grant of up to 10K is now tax-free. Back to you, Sasha.
Thanks so much for that overview there, Jyoti. Can you tell us a little bit more about the application procedure this time around for PPP loans?
Sure. So the second round of the Paycheck Protection Program loans has reopened on Monday, which is January 11, 2021. Initially, the PPP loans will be available through the financial institutions that serve women and minority-owned businesses. And from today, they will also be open to the second-time borrowers. As you may all know, the application forms for the round 2 of PPP are already out. The forms are pretty much similar to the forms that were issued in round 1. They do need details like the average monthly payroll, the number of employees, the purpose of loan, the list of owners, etc. And in addition, for the second-time borrowers in the round 2, there is also a box wherein you need to mention the reduction in the gross receipts, which is like the main criteria for the eligibility for the round 2 for the second-time borrowers. Also, this time, the documentation requirement is big different as we need to prove the 25% reduction in the gross receipts. Hence, we would need to give the quarterly financials or the quarterly profit and loss statements and tax returns. And as far as the PPP loan in round 2 goes, you could either reach out to the same bank you worked with for round 1, or you could approach a new bank. Either works. Back to you, Sasha.
Thank you, Jyoti. So Kapil, what are some things that businesses should keep in mind related to required documentation for their PPP loans?
Sure, Sasha. Again, I think one of the questions that we get from our clients already, they have started asking the question is whether they should use the cash or accrual method of accounting when they are calculating the 25% reduction. And the answer at this point, there's still the regulation that they are signing and it's not very clear. But at this point, they are saying that it should be based off the tax returns that were filed. So let's suppose the client or the borrower selected as a cash basis of accounting in their tax return, they should use that basis of accounting to come up with that reduction calculation. And other than that, what we really need to see is the government is really not asking for a whole lot of documentation if the borrower is borrowing up to $150,000. All they are saying is at the time of application, they just need to submit and certify that yes, their revenue has gone down by 25%, even though they don't need to submit any financials, any tax returns at this time. However, if the loan that the borrower is borrowing more than $150,000, then yes, at the time of application, they do need to come up with the financial statements and tax returns, because they do need 2020 financial statements and 2090 financial statements. And sometimes the tax return for 2020 may not be ready because the client is already in the process of filing the application very shortly. But as we know, for many of the borrowers, the tax returns for 2020 may not be done for another, who knows, 2, 3, 4 months. So that's why in that case, they can submit the financial statements and apply for the loan. So again, take home point is less than $150,000, nothing needed at the time of application. Only thing that is needed is to certify by the borrower. That certification needs to be done. But however, if the loan is more than $150,000, then yes, they do need to provide the tax returns, financial statements, even at the time of the application. And in addition, just keep in mind, but when you actually apply for the loan forgiveness, then it doesn't matter the loan is 150 or less. or more at that time, yes, for both kind of loans, the government do want the financial statements and tax returns by that time.
Okay, thank you, Kapil. So how about tax deduction opportunities? Are expenses paid using PPP loan funds tax deductible?
Great question, Sasha. I think this is one of the great thing that happened to the businesses where they got the money from the government, and initially they were, kind of a thought process. They were saying, the expenses that you will pay out of the loan given by the government, which will not be deductible. However, then IRS came up with a circular and clarified that all the expenses that you pay through the loan that you got from the government will be deductible, which is a great advantage for the borrowers, for our clients, because now they can write off that expense, which will help them reduce their bottom line and hence pay less taxes. So that's a great thing that happened to many of the borrowers. And in addition, we need to make sure whatever I'm saying is at the federal level. IRS is an authority which issues the guidelines at the federal level. However, each state is different, and we have to really look into what are the state qualifications, state requirements when it comes to the deductibility of the expense. And each state is different. For example, California has issued the regulation and they came up with a circular that no, you cannot deduct those expenses that which are paid by the loan given by the government. So for each state, we would have to really look into that, for which the viewers can kind of consult us and come up with any questions they have, and our team would be happy to help.
Wonderful, thank you. So that brings us to the end of our presentation. Now we'd like to open up the floor to questions from the audience. If you haven't already, please feel free to submit your questions into the chat box. So for starters, we've already received some questions from our attendees today. So the first question that we got is, what are some acceptable time periods for average monthly payroll? Who would like to take that one?
I can take that, Sasha. So again, for average monthly payroll, the government is saying, you can take either 2019 or 2020 period. So again, the whole year 2019 or 2020, and then if whatever the expense for the entire year, they can average that expense for that month. So either 2019 or 2020.
Okay, thank you. Another person asked, they said our decline is 25% for 3 months, including May, June, and July 2020 only. Would we still qualify for PPP2 as our second round?
Sure, Sasha. So the Act actually just says that you need to follow by the calendar quarters. So you would need to go by the calendar quarters.
Okay, thank you for that, Jyoti.
I would like to add that to Jyoti, Sasha here. In this case, I think the point to be noted is if the client is off based on the calendar quarter calculation, but if their revenue is down in totality for the entire year, they still qualify. So they may not qualify for that quarter, but if in 2020 the revenue is 100,000 and in the 2019 the revenue was 200,000, then they do qualify.
Okay, thank you for that clarification there, Kapil. So another person asked, do you have to apply for forgiveness first on your first round PPP loan in order to apply for the second round?
So Sasha, the question is if they need to apply for the forgiveness first and then apply for the loan for the second round?
Yes, Kapil, thanks for that.
Yes, and again, first they need to go through that. And for as long as they have not gotten that money and not forgiveness, see, forgiveness is not a problem. Forgiveness can come later. As long as they've gotten the money is the point. Forgiveness can come later. They can still apply as long the criteria is they should have used the money from PPP1 program, or they must be using that money before they get the disbursement for the PPP2, not the application and forgiveness, but they must have used the fund.
Okay, thank you. Another person is wondering for their second round PPP loan in order to qualify the second time around. They had 1 quarter where their revenue reduced in the same quarter from 2019 to 2020, but then they had a quarter where the revenue actually increased. Would that change whether they qualify for the second round loan?
Sure, Sasha. So the Act says, any quarter is will make you eligible for the PPP2. So that's fine. Even if one quarter does prove the reduction, they should be good. And if they don't have any quarter where they don't have a reduction, as Kapil just mentioned, they can look at the year over year. And if there is a reduction on year over year, they're good to qualify.
Great. Thank you for that, Jyoti. Let's see here. Another person was wondering, when does the covered period start, and could you explain a little bit more what the covered period means?
Sasha, I can take that question. Yeah, the covered period means it's the period when the loan was disbursed. So it's the funding. So that's going to start from that date, and at the option of the borrower can select between from the 8 weeks to 24 weeks from that funding or disbursement of fund.
Okay, thank you. And in order to calculate the 2.5 times or the 3.5 times of their average monthly payroll costs for the loan amount, this person is wondering, oh, you know what? I'm sorry. I think we already answered that question. Another person is wondering, do we have to provide our tax return for 2020 in order to qualify?
Yeah, Sasha, I think that's another good question. And we know from the logistics point of view, when most of the borrowers will be applying for the application, their tax returns will not be ready in the most cases. And if the loan is more than $150,000, then they do need to provide tax returns or the financial statements. But if the loan is less than $150,000, then they can just certify the application and make that application, in which case they do not need the tax return and financial statements at this point.
Okay, thank you. Jyoti, one person asked, I've heard that we should wait until February 2021 for the new forgiveness application. Is it wise to wait until next month before I apply for forgiveness?
So that's a good question, Sasha. People are contemplating there could be a new form, as I did mention that the EIDL advance is not going to be deducted from the forgiveness amount. So, I mean, it's up to the people. If the banks are accepting, they can go ahead and, file it. And, I mean, there is no harm waiting to, because anyways, you have 10 months from your covered period to apply for your forgiveness.
Thank you. Kapil, because of ADP's error, this business applied for a lower loan amount and the loan was forgiven. They're wondering, can we apply for the balance remaining now?
Yes, Sasha, I think that's another provision that the Act has, which says, you can, as a part of this new provision, edit or modify the first application to come up with any balance loan that you think you might qualify and can apply for that loan. The answer is yes.
Thank you. Jyoti, this question is for you. Is it possible to apply for a second round of EIDL loans?
Yes, Sasha. So it's still on. It's up to the entity's creditability and their revenue limitations. If they do, yes, they can.
Thank you. Okay. So Kapil, this question is for you, and it's related to calculating your revenue drop when you have multiple entities. So this person, they saw a 25% decrease in one of their entities, but they did not see that same decrease in their other entities. So they're wondering, can they apply for the affected entity only, or do they have to combine them?
No, Sasha, yes, they can apply at the entity level, and if any entity is suffering, then they do qualify the loan for that particular entity under the same group.
Thanks so much for that. So Jyoti, for those who have already gotten the PPP loan in the first round, do they need to prove that they've lost any revenue when they're applying for forgiveness?
Hey, Sasha. No, I mean, you do not need to prove the loss of revenues for the forgiveness. The loss of revenue is to be proven only for the second time drawer. So, like, if you're going to apply for a second time PPP loan, that's where the reduction comes into picture.
Thank you. Kapil, this other question also for you is related to when IT staffing companies or similar companies have multiple locations, and they're wondering, they have one EIN. If the employees don't work from one location, but they work at an end client location, how does that work in regards to qualifying for the second round?
So Shasha, we get this question quite a bit because of a lot of IT staffing companies and other companies, and the answer is as long as it's one federal ID number and they are falling under and the payroll is processed under the same federal ID number, then they can be placed at different location, which is not their offices but the end client's office. Then in totality, they're still considered to be only one location.
Okay, thanks for that. Jyoti, this next question is for you. What documents do I need to show that there has been a decline in our revenue from one quarter compared to the same quarter in the following year?
Sure. So Sasha, as we also covered in our previous slides, this year for this new round where you have to actually prove the 25% fall on quarter over quarter, it is essential to provide your quarterly profit and loss statements. And if you're going over year, you would need to provide your tax returns for 2020.
Thanks so much for that, Jyoti. We still have a few more minutes left, so we would encourage you to please submit your questions into the chat box if we haven't yet responded to any of the questions that you have in mind. Okay, well, I guess we will conclude our webinar for now. Thank you so much for attending. If you have any further questions that you would like to submit, please send us an email at info@chugh.com, or you can send an email to any one of our presenters at their contact information as you see on the screen. We also wanted to let you know that we will have webinars each week on PPP loans to answer your most frequently asked questions, so please stay tuned on our website, chugh.net, and register for future events there as well. The video for this event will be shared on our YouTube channel, so please feel free to check in tomorrow and see the video there as well. Thank you so much for attending, and we hope you stay safe and healthy and have a wonderful week ahead. Thank you.